Hi everybody, it's Christopher from Serene Education. Going to be doing the 4 majors notice update for the first week of June 2015. So this is from 31st of May to the 6th of June 2015. Going to start with the euro against US dollar. Looking at the monthly, okay, we're going into this, tomorrow is the first, Monday is the first day of a new month. So what we want to see is to have a look back at what's happened in the prior month to give us an idea of what we could expect for the forthcoming month. So euro against US dollar on the monthly, you can see that we've seen some action, a lot of indecision on the market. You can clearly see that we had bulls on euro through the May month. However, price has pulled back over the last week or so, and subsequently we've seen price now dropping back below the current 2-month resistance level. Okay, price support going into January and February. Then we saw March drop lower, then April moving high again but failing to close higher, and then we've seen this month indecisive yet again and forming. You can clearly see there's a clear line that's been drawn in the sand around that level as a major support and resistance level for 2015, roughly around the 11200 level. So 1120, nice round number, clearly a marker in the sand. So looking at the indicator box, you can see straight away there's a lot of negativity still in that long-term bias. However, on the weekly time frame, you can see a number of blue indicators, and these indicators are predominantly the actual trend indicator here, the MACD in particular, parabolic SAR. The dot is below price, which is not what we really want. We want to see that level dot above price if we're on a negative trend. You can see here on the monthly, clearly we're in a negative trend. We have seen a lot of negative bias for this particular pair, all I'm moving up to above price. And all the indicators are clearly stating that. The only one that is not stating that we are looking for any shorting opportunities at the moment on the monthly is the MACD level. You can see the MACD here. Yes, it's below the 0 level, which is important, but you can see the moving averages have crossed over, and subsequently that's told us that price is now in a consolidative range or consolidated period, and clearly you can see over the last 2 months, in fact, that price has failed to make new lows. Therefore, we are not seeing any continuation long-term trend at the moment, so we should be looking for consolidation, and that's clearly what's been indicated on the chart. There we go, drop down to the weekly. You can clearly see that we've not really seen price making any new lows recently, and when I talk recently, back in March was the current 2015 low. We've not seen price breaking and trading below that at 104668 change. So if we are looking to trade a negative trend, then we need to see new lows. Clearly, negative trend, new lows, swing low, swing low, swing low, swing low. You can see that all the moving averages above price and all the indicators bar the MACD, which has told us we should be looking for negativity. So clearly we've seen a pullback over April, and that's predominantly because of those non-farm payroll figures that came out really weak, and subsequently all the data that came out for the remainder of that month that really pushed a negative US dollar lower, and anything against the US dollar actually retraced. In this case, clearly the euro against US dollar did exactly that. However, saying that, the last week or the prior week we saw negativity unfolding, and this happening clearly at the pullback level in February of this year, 2015. Clearly you can see a lot of selling going into January, and then as we head into February we saw a slight pullback, profit taking, and prices actually fell to this level. You can see that price was trading above the 20-period moving average, which was a clear resistance. Price had failed to get above that level for the best part of 9-10 months. In fact, we actually saw price trading above the 20-period moving average. We have to look way back to April of 2014. So we want to see price kick on. 2 weeks ago, that failed to materialize as price actually found resistance at the same level, and we saw a lot of negativity coming in for euro, and subsequently we saw price dropping low. Nice bearish engulfing candle. So last week you should have looked for selling opportunities to start with through last week. In fact, we should have looked for selling opportunities within that week, and you can see it now. Last week you can see a very indecisive candle in itself. Okay, so what we want to see this week or the new week is a continuation of long-term trend to the downside. The candlesticks are still negative, the overall bias is still negative. That bearish engulfing candle that we saw 2 weeks ago is indicated that there's more bearish sentiment within the move. Having said that, we want to see a continuation this week of that negativity. So we need to see Monday, Tuesday, Wednesday, Thursday, Friday of this new week making new lows. Okay, the most important thing to remember is non-farm payroll is on the books this week because it's the first week of a new month. Therefore, we should see non-farm payroll, which means that this week there's going to be a lot of data coming out from especially Wednesday onwards. And Friday, non-farm payroll, the figure is they're expecting a positive figure compared to the prior figure. Small increase, but nonetheless an increase of a better figure. And then the unemployment rate, they're expecting no change. 5.4% was the prior figure. The forecast is for 5.4 yet again this month. So these are the most important figures we're going to look for. But barring before that, Wednesday, in fact, we have a lot of, well, Tuesday, we have a lot of data coming out. This entire week has got a lot of data in it. So the first week of a new month vitally has a lot of data. So therefore, we need to be well aware of that fundamental news and how that's going to impact the market. So yeah, negativity, that's what we're looking for. A lot of bullish bias intraday on the euro against US dollar. You could see, however, that there's a lot of negativity on the long-term bias. So therefore, for the start of June, we're looking for a continuation of the negative bias to the downside. So going to be looking and just applying pivot points on here. Straight away, you can see the monthly pivot. Price is just below it at the underside. You can see price failed to get above their monthly R1 level over the past couple of weeks. And so we've seen price actually dropping below the 10998 and change now. So when we drop down to the daily, what we want to see is price now finding resistance at this level. We see last week we saw a bit of bullish bias as we headed into the end of the week. So that's Friday, Thursday, and Wednesday. Okay, we saw price pulling back. Now we want to see is a resistance level being forged at the monthly pivot. And if I just pan out, you can see that price is at crossroads. You can notice back over the weeks, you can see prior support, then resistance through March, in fact April, and then further support through the start of May, and we're back below the level again. So we're actually trading below a major support and resistance level. So if we're trading below a major support and resistance level, there's more negativity. Okay, so we have red arrow, red candles, both the 20 and 50 and the institution are above price. Not in order, but still above price. Everything's telling us we should be looking for selling sentiment on the daily. However, we're seeing clear pullbacks. Okay, so we should see the MACD dark red, which is the case because we want to see a continuation. So this week we need to see a bearish engulfing candle close lower to conform with breakout pullback and then continuation with the long-term direction, which is negative. Okay, so we're looking for either very weak euro data or very negative US data to give us that, because that will then outplay on the charts, which will then give us a candlestick to conform with long-term trend, which in this case is we're looking for negativity. So this week what we're looking for is a bearish engulfing candle close lower on a daily time frame to give us a confirmation of negativity, a continuation of negativity, and then we could start to look towards these lows over here. So the monthly 1073 would be a particular first target of choice. And then S2 down the bottom you had 1725 and change. There is a small intermediate uptrend over here, support trend, which concurs quite nicely with that monthly S1. So that will be a viable first target this week. And you're looking between these 2 points, 234 pips. Not going to get all of it, but there's enough in there just to see a nice little return on time invested. So what's missing from here is clearly a confirmational bear candle closed low. So just keep an heads up when I open for that to happen. Moving on to sterling, starting with pair monthly time frame. Always start with the monthly. Here again, you could see a lot of negativity coming in. We saw the sterling gaining a lot of ground against the US dollar for the start of the month of May. However, having said that, as we headed into the latter part of May, we saw price really pulling back. And what it's done is it's actually pulled back and now trading below the April close. Okay, vitally important. You can see a lot of hesitation in sterling. Notice the indicator box is peppered with both red and blue icons. Majority long-term sentiment is still negative. However, saying that, you can see the MACD on the weekly and the parabolic SR not conforming with that negative sentiment. Okay, MACD, we want that to be negative. If we want a negative trend, we want to see the MACD negative. But you can see that we've had a number of months of consolidation, hesitation, erratic volatility, volume, sentiment on the monthly. That would indicate a very messy weekly setup. And if I drop down to those weekly setups, you can see messy. Okay, and over the last, since April, in fact, we've seen sterling losing a lot of ground, predominantly because of the weaker data that came out of the US market of April, which then put or saw sterling rising on that. It wasn't because of great sterling figures, it was predominantly because of the weak data that came out of the US market. Having said that, that's been capped. We saw the last prior weeks, we saw almost a bearish engulfing candle at a major institution moving average as well as the 50 being capped, and that led to further negativity this week on the last week, in fact, on that data. Still trading above the 20-period moving average. Here again, like the euro against US dollar, you'll notice that the 20-period moving average was a clear resistance of price, and now you can see the 20-period moving average was broken a month ago. Having said that, we're now testing back towards those levels. So I'm just going to apply my monthly pivots on here just to give a gauge and see where price is in relation to everything. So looking at the action right now, you can see that the monthly pivot 15138 and change. Remember, this is going to change tomorrow because this is still effectively the May. So this evening at 12 o'clock will be the start of a new month. So all these would have to be re-plotted again. But as it stands right now, you can see that the monthly pivot is still below price, which is not what we want to see. If we want a negative trend, then we need to see price trading below the monthly pivot in order for us to then trade to that negative side. At the moment now, yes, we've had 2 consecutive current negative candles on the weekly. The bias is clearly showing negativity, but we do need to get below that level to really conform with long-term trend direction, because at the moment now she's trading back within it. She's going to be trading back within a very messy consolidation that we saw for the start of 2015. The first quarter of 2015 has been very messy, so we need to see that happening this week. So we drop down to the daily. We want to see Monday, Tuesday, Wednesday, Thursday getting back below that monthly pivot level. You'll notice that the candlesticks up until recently last week, in fact, we saw a negative red arrow. However, the candlesticks were still blue and the RMO was still above the 0 level. MACD is clearly closed lower because the intermediate trend was broken. Okay, you can see the April, no new lows, swing high, swing high, swing high, candlesticks, everything was above. So the intermediate trend was up. Now we've broken low over this last week, in fact, so we're now seeing further negativity with long-term trend for sterling, so therefore we should be looking back towards these lows over here. So 15138 would be your first target requirement if you are going to trade aggressively. However, looking long-term, we do need to see this level being broken to then look for negative bias to come back into the market to push price back below those 2015 lows that we saw in March and April of this year. So here again, look at the data. There's a lot of data for sterling this week. In fact, we've got manufacturing PMI results on Monday. Very important one. They expect expansion there, so that would be good for sterling. So in this case, look to see if there's any news. We could actually see price actually consolidating here. If that's generally the case, we could see potential pullback coming into it. And then looking later into the week, we've got the construction PMI result. There again, expansion, which is positive for sterling. We have the Wednesday service PMI, which is expecting a contraction. 0.3% is the forecast difference. But then Thursdays, we have the interest rate decision, 0.5. Don't expect any change there because quantitative easing plan is clearly in place. I don't see an interest rate change until at least mid-2016 as it seems at the moment, so there's no change there. So the overall bias for data for sterling this week seems to be expansion. Now, that could be quite interesting. If we are looking to trade a negative sterling, then we need to see negative data. So then we would have to look at US data being negative. And over here you can see, if I look at the data quickly, Monday manufacturing PMI results are meant to be expansion for the US market. There again, that's going to counter trend the move there. Then we have ADP non-farm payroll figures on Wednesday. There, the employment figure is higher. In fact, almost 40,000 plus new jobs created, which would have a negative impact on any other currency. That would then force sterling lower. So very important to have a look, actually look at that. Having said that, the manufacturing PMI result is for weakness, so please be vigilant. There's a lot of data here that looks to add to potential volatility in those intraday time frames as we head into these major news announcements, which would have a detrimental effect on price action itself. So vitally important that you're well aware of it and how it can actually impact price. Very, very important. So look at the data this week to see if it's going to give us a clear indication of continuation with long-term negativity for sterling, or are we going to see a reattempt of the May highs that we saw recently on a potential further pullback against the long-term trend. Moving on, the US dollar Swiss franc, long-term bias clearly has been negative over the years. However, having said that, since 2011 we've seen actually price trying to make new highs, but subsequently being hindered by this major support and resistance level here at the 9968 change level. So clearly a major resistance level for price over the last couple of years, and yet again in 2015 further resistance. The last couple of months, well, the prior month, actually in April, we saw a bearish engulfing candle and we saw prices pulling back slightly. However, you can see that the current month is still indecisive. Spinning top, it's traded lower than last month's low. Having said that, though, she's back above that level. So clearly a slight support level being forged. Yes, it's an indecision candle, but price has failed to make or closed lower. Yes, we've got to wait until the end of tonight. In fact, I remember we're still in effectively May. It is the 31st today, if I'm not mistaken. So we've got to see this evening's close, and then we can actually relook at the actual candle. But as it stands at the moment now, you can see that prices trading above the April low, and effectively we are seeing negativity. Then we need to see price trading below the April low to give us that. We have seen prices trading lower, but as it stands at the moment now, there's more price action to the upside. Indicator box is blue, but you can see a lot of hesitation started. Indecision trying to come into this long-term bias of positiveness. You can see a lot of negativity on the intraday. The R squared is not really complementing all that. So a bit of wishy-washiness coming into this particular pair. If you drop down to the weekly, you can see that price action hasn't really been all that great in terms of trend trading. It's been quite messy consolidation. We have seen prices moving low on the smaller time frames, but very, very risky action on those intraday time frames. You can see now looking at the weekly, we had a very, very indecisive week last week after a positive bullish engulfing candle the prior week at the institution moving average. The candlesticks are still positive, so it's telling us that we should still be looking for positive bias to the upside. However, we do need to see a continuation. You can see last week we were looking for this week to continue on the prior bearish engulfing candle. That failed to materialize. We saw a number of days where price actually traded higher than the prior weekly candle high. Having said that, she still failed to make a new high, and that's what we want to see. So positiveness, we haven't got a blue arrow here to concur that everything's looking up. And you look at the weekly here, you can see that the RSI is still below 50. Linear regression is still below the midline. And the MACD, which is the most important one because we're trading trends, by the way, that is still telling us we should be looking for negative sentiment. So clearly nothing really stacking up on this one. So we do need to see a direction. Will this week, being the first week of a new month, will they give us a directional change? That needs to be seen. So all you guys out there looking to the market fundamentals, have a look and see if there's anything out there that could actually give us an idea going into the second, third, and last week of June in terms of trend direction. So here, patience is vitally important. Just going to plot the pivot points on this particular pair. There we go. You can see that the monthly pivot is above price, okay, which is not what we really want. If we are looking for positiveness, then we need to see price trading above the monthly pivot, and it's still clearly trading below the monthly pivot in May. So vitally important, if we are to see any further upside for this particular pair or bias tension to the upside, then we need to see price closing above it this week or trading above the monthly pivot to head towards that monthly R1 level over here as a clear target. Having said that, these monthly pivots will change at the close of Monday's session, primarily because we're going the 1st of June is effectively on Monday, not this evening. So there again, we would have to plot the pivot points again for Monday evening close, because that would give us a genuine recalculation of the pivot points. So effectively what we're doing at the moment now is we're seeing I'm doing my analysis on the pivot calculations for May, and yes, we are seeing the last day of May today, so we'd have to see the close of this evening's candle, Sunday session, at midnight, to then recalculate the monthly pivot and weekly pivot, etc., for the start of June, in fact. So here, this is clearly, you can see price support and resistance at this level. A lot of hesitation over the last couple of months. Support wise, we are trading back below that level. We've seen a correction. What we're going to see now is either one or two things. We're going to either see a pullback and then a break and continuation low with the intermediate trend, which is negative at the moment. Swing low, swing low, swing low. Price has not made any new highs. She's actually swinging low on the weekly. We've seen a pullback. Having said that, she's trading at the underside of a major support and resistance level, which is the monthly pivot level here at 95010. So here, got to see that level. See the daily, the institution price now above price. If we are seeing positiveness, then we need to see the institution below price. 20 is also below price. 50 is above price. Nothing stacks up at the moment, and that's the problem. So here again, look to this week's data to give us a genuine confirmation of where price is heading. Because at the moment now, the US dollar Swiss franc, we've had a pullback over the last couple of weeks. Having said that, we're trading back now into a major trend resistance level at the moment, and in order for us to see this is genuine positiveness coming in for the US market, we need to be trading above it, not below it. So here again, look towards the fundamentals to give us that signal, and then we could trade with better certainty going into the latter part of June of 2015. Last pair is US dollar Japanese yen. Okay, you can see this box of here a lot better than the other ones. A lot of positiveness coming through, and you can see this month of May, very, very positive outcome for the US dollar against a yen. But most importantly, we do need to see something happening, because as you can quite clearly see, 1, 2, 3, 4, 5, a lot of resistance for price action over the years, and that's predominantly because price is trading at a major support and resistance level that goes back as far back as 2005, 2007. A lot of resistance over here. You can see the overall trend bias was very much negative to the downside on the monthly. You can see clearly as the head into the institution broke above it, now total change. But having said that, you can see prices now resisted. So if I just apply the pivot levels on this particular pair, you can see they're quite bunched up, the monthly pivots. But the most important one is I'm looking at this color, the red color. You can see quite clearly that there was a lot of indecision around this level. That's predominantly because of the major support and resistance levels that go back to those 2005, 2007 highs. So I was looking for a bullish continuation, and if you look at the last couple of months, has failed to give me any bullish continuation candles. In fact, they gave us spinning tops, further indecision at a major support and resistance level high, or resistance level in this case. So a lot of indecision on those weekly, daily time frames as price has been going backwards and forwards, not really giving us any true direction. However, having said that, the month of May, we have seen a lot of liquidity coming back into the market and pushing the US dollar higher against the yen. And that's what we wanted to see. And you can see a nice bull candle continuation. The bias has always been for further upside. Long-term sentiment is painting blue. So we should be looking for further positiveness. But we couldn't trade that effectively because there was a lot more risk on the table, because price, if I drop down to the weekly, was trading within a very messy range. You can see we are capped by the monthly R2 level here, which were the November-December resistance level highs, both the March highs, and you can see the prior week's high here going into the third week of May. So needed to see trading higher. Last week's candle, we did get that. Perfect. Now we have a continuation. So this week, we're looking for price to make new highs and effectively create new opportunities to the upside. That's all we wanted, because now we're trading below almost a 5-month resistance level, which is a good sign, because now we're seeing further positive data coming back into this particular pair, especially the US dollar strength against the yen in this case. So therefore, we should be looking for nothing more than upside. So here, when you drop down to the daily, straight away get a buy signal. It has been positive for the daily. It has been positive over the last couple of weeks, as we saw positive generating momentum within this particular pair. Now we've broken higher. So any yen crosses, look for any potential particular trades to the upside. You can see that Friday we actually saw price trading higher after the Thursday consolidation. So for June, look for continuation of that. However, say that this is the US dollar against Japanese yen. Look to see if there's any change or continuation with non-farm payroll figures coming out on Friday. That could lend into that. So vitally important there again. Look at Wednesday's data right through to Thursday and Friday's data, because there's a lot of data out for the US market, which would have an impact on this particular pair going forward. So do your due diligence, look at the fundamentals, and see if they continue to paint a positive figure for the US dollar going into the month of June. I'm going to leave you with that. Short and sweet, all 25 minutes and change. Please, guys, make it keep to the basics. That's what that's all I can really say for now. Follow it up with very, very good money management, and you'll end up being a lot more profitable. And keep it as simple as possible. I'm going to leave you with that. Hope you have a fantastic trading week for the first start of June. I hope you have a fantastic June. Most importantly, trade serenely.